From the morning reading, the SPX goes sideways at short-term support in a bull flag chart pattern. Earnings dominate, Facebook lower. In after hours, Amazon, GoPro lower, Visa higher. Breadth strengthened compared to the prior session and led 1647 to 1343 on the New York Stock Exchange, and decliners led 1469 to 1335 on the NASDAQ. On the S&P 500 snapshot, another fractional close. The S&P 500 has essentially gone nowhere for the past 3 sessions, logging 3 fractional moves. The index spent the day zigzagging around yesterday's closing price, ending the session around a 0.06% closing gain. The close at 2280.85 is a whisker below Monday's close at 2280.90. The S&P 500 may be stalling. The stock market's major trend is still up, and there are no signs of a major top. Shorter-term momentum indicators, however, show some stalling. That may lead to nothing more than a short-term pullback or a period of relatively choppy action over the short to intermediate term. The S&P 500 hitting a record high last week. Short-term momentum indicators like the RSI and MACD, however, failed to confirm that upturn. The box on the top of the chart shows that 2 MACD lines turned negative in late December and remain so. The last time that happened in August and April, the market underwent a pullback lasting 2 to 3 months. The last market upturn in early November coincided with an upturn in the MACD lines. Current weakness in short-term momentum indicators may simply be signaling a period of relatively choppy trading within the context of a major uptrend. It would take a price drop below the 50-day line and the early January intraday low, 2233, to signal a start of the downside correction. Technology sector reaches overbought territory. Big tech stocks are up against resistance or pulling back. Healthcare winners include IDEXX Labs, Boston Scientific, and Merck. HCA holdings may be near bullish breakout. The S&P 500 may be stalling within the major uptrend. In other morning news, stocks have fallen into a winter hibernation. After spurting to new all-time high in late January, the S&P 500 has had a daily change of less than 0.1% for 5 of 6 sessions since then. It's almost unprecedented, but there have been times when it has contracted into an extremely tight range after a breakout. Several of those have occurred in just the past few years, and all of them preceded a tough slog for stocks over the medium term. Hedge funds are betting that the rally continues. Exposure to stocks among macro hedge funds is estimated to be the highest since July of 2015 and the 4th highest in the past decade. The 3 other times it got this high, stocks struggled as the funds reduced exposure and eventually went short. Stocks have tended to rally the day of the non-farm payroll report when near a high. When the S&P 500 has been within 1% of a multi-year high, it rallied the day of the non-farm payroll report 37 out of the last 49 times. But the next 2 days it added to the gains only 21 times. This is one of the only economic reports that has the tendency to mark inflection points when stocks are near 52-week highs or lows. Hello, this is Stephen Harris, a head trader from Falcon Global, where we model best practices for investors, traders, and day traders from entry to exit every trading day. In this daily video, I provide my opinion and insights of current market trends, market timing, volatility, and hedge risk levels for the upcoming day for the key U.S. financial markets. It is 6:15 a.m. Mountain Time, and I'm recording this in preparation for the market day of February the 3rd, 2017. Full disclaimers are at the end of the video, but be aware that this is for educational purposes only, and only you are responsible for the investing or trading decisions that you make. Okay, let's go ahead and bounce into the morning report. And at the time of this cut, all 4 of the U.S. broad-based indices were positive, albeit in a very subtle way. The S&P futures and the NASDAQ futures were up just above scratch. Russell futures were a bit more robust, up about 1/3%, and the Dow futures were up almost 1/4%. In other markets, crude oil was up about 1/3%. Euro was down about 1/4%. Long bonds down just below scratch, and gold down about 0.5%. China is open once again, and for being closed as many days as it did, a pretty small range. It's down 0.6%. Hong Kong down about 1/4%. Japan on scratch. Germany up about 1/4%. United Kingdom up about 0.4%. In macroeconomic reports for today in the United States of note, you have the package of information related to the monthly employment report, and you also have FOMC member Evans speaking. Also after market open is ISM non-manufacturing PMI and factory orders. In terms of current volatility conditions, short-term VIX at 11.16, skew a little bit higher than even yesterday's measure, coming in at a 136.65. IV percentiles still very, very low, with the S&P coming in at a 13, the Russell at 13, the NASDAQ at 8, the Dow at 20. No standard deviation size moves were put in on any of the 4 U.S. broad-based indices yesterday on a close-to-close basis. Okay, let's go ahead and go to the charts. And on the S&P futures, you see yesterday's action. In fact, one of the morning authors mentioned, you know, the really tight action. You look at this, 3 consecutive dojis in a row. So you take this in context. We had the breakout of the diagonal resistance, the breakout of the horizontal resistance, leading into a new all-time high. But then you get something of a pseudo island top kind of formation in a multiple candle pattern. That then breaks down and then goes straight into this very, very narrow range sideways pattern. So the bears, you know, certainly are not in control, but neither are the bulls. And, you know, the question becomes, is this just a false breakout? Or is this, you know, kind of what we've been talking about, where we make these, you know, incremental new highs followed by long periods of chop and range-bound action. This is certainly a microcosm of much of that action. We'll see where this goes. Best probabilities, I still think, are slightly with a small bias to the upside and periodic moves like this one here to the downside to kind of test the resolve and see if the bears can get anywhere. There's a lot of support up underneath, and you see key moving average lines, but also the cloud and not too distant from the current price action. So any downward move is likely to be quite muted. Other indicators from our daily report also indicate expectations of very muted moves to both the downside and upside. So kind of keep all this in mind. And you know, if you're doing option income, it's a bit of a trick because the volatility is so low. You're not getting a lot of premium for your option income trading. And yet at the same time, it would seem that an awful lot of those trades would likely end with, you know, the market having gone nowhere and you be able to keep the income. So not a perfect circumstance for option income trading. You like a little bit more volatility, ideally 12 to 15. And yet at the same time, 12 to 15 on the VIX, I should say. At the same time, you know, bullish swing trading is also not terribly easy because your follow through and your ability to actually get to targets of any significant size is quite challenging, and that the broad market, which basically dictates about 80% of the movement of individual companies, broad market certainly is not giving you any tailwind whatsoever. In other markets, you're going to see on the Dow, very similar pattern. On the Russell, the definition of sideways and neutral. And on the NASDAQ, of course, it's been the hero of late, as some of those big components, and we've been talking about Apple and Facebook and others, have been doing pretty well. We'll take a look at Facebook here in just a second. We've had a couple earnings come in. Facebook did have earnings yesterday. Fairly volatile day, and you know, both a new all-time high and yet a close well off the high. So that's the craziness of earnings. You also had a situation where $1.11 was the estimate, $1.41 was the actual. So, you know, on the headline number, it seems like a blowout earning, and yet when they get into the conference call and start talking about, you know, future expectations and so forth, the big sell-off is generated. Apple, of course, also had very good earnings and has held on to those numbers and is closing in on the all-time high around the 134 level. And Google also on earnings, both like Facebook, hit a new all-time high and then started to sell off and is, you know, gone as low as 812 after being at 867 on earnings day. So a lot of volatility in the response to those conference calls. And then Netflix. Netflix also on earnings gapped up but then fell back. Now it has consolidated and held on to those gap gains, so we'll see if indeed that becomes its new base and it builds from there. So you see some of the big components of NASDAQ responding to their respective earnings reports in a variety of ways, but certainly, you know, generally holding on to much of the value in most cases, especially Apple, Netflix being the better examples. Well, let me see here. Let's take a look at the other markets. Crude oil, sideways pattern. Absolutely nothing to indicate it's doing anything in a trending motion at all. Gold also in a sloppy sideways pattern. We have tested this area of resistance and failed once again. A little bit more serious test. It's still within the cloud, which is defined as a neutral posture. And yet at the same time, we've got this big counter trend move that, you know, seems to want to break to the long side. So we're watching to see if that could actually happen. It's hard to take a side on gold right now to the bull or bear side. Your shortest term indicators would seem to say that you're bullish. You know, we've got several weeks now of a rising market, and yet in the overall context, you've got the trend that led into this counter trend move is strongly bearish, and then you got us in the cloud, which, you know, indicates neutral. So you could make a case for all three cases, bullish, neutral, or bearish on gold, depending on your time frame. So not an easy place to be setting up a swing trade or new position at this point. The dollar, of course, has been generally weak, had broken down below the cloud, but, you know, now back into the cloud. So, but it's still within an overall channel, and bearish channel at that. And then bonds. Bonds have been sideways in the most recent action, along with the market. Very, very sideways, very, very quiet. And the VIX, of course, has, you know, at times picked up a little bit of volatility when we've had these vents at negativity in the broad market, but then loses it as the bulls come in, the broad market recovers off the support area. And right now we're currently trading at around 11.65, so still below the 12 to 15 area, still exceptionally low volatility, and certainly not a lot of fear being priced into the market. And when you have premium levels this low, when you have volatility this low, generally not expected to have large moves in the market to either side. So in many ways, kind of going both directions with a lot of sideways action going into the news report, which will be due out here in about just 4 minutes. In terms of our daily report, more evidence of indicators calling for this kind of subdued action. We've got a weak market phase 5. We've had the break of diagonal support, but not yet the break of horizontal support. The 3 market timing signals are confirmed uptrend, bullish. GMI index, 6 out of 6. Buy signal in place since 11:10, bullish. And stock charts decision point scoreboard with the mixed signals and no change in quite a number of sessions. Still mixed signals short term, long term. Position sizing opinions, both models still at 100%. Intermediate term market postures showing a lot more weakness than the upper part, which is based on, sometimes a little longer time frames. This is anchored on the intermediate term time frame, and the most important index being our benchmark S&P 500. You see weak bear there, and that weak bear is also combined with a neutral sentiment line. So very, very strong indication of a sideways market. Of course, also Dow, weak bear, Russell, strong bear, and then you throw in there the NASDAQ still holding on to the exceptionally strong bull. So very mixed signals here, most of them weakly bearish at this point. Hedge warning status 0+, normal with some elevated conditions. Strategy opinions, no change from yesterday. Still talking about this VIX being below the 12, below the acceptable range to initiate positions for novice traders. In terms of specific areas of warning, you still got this low VIX. You still got this distribution day count continues to persist in the warning area. You still have a high, actually quite high, skew at over 135. And the trend-based areas still have these 2 weak warnings. And then the intermarket risk aversion indicators, all 5 of them are essentially locked in neutral at this point. In terms of sentiment indicators, the intermediate term has started to elevate a bit. It's at an 8 overall. The fear and greed index is locked in at neutral as well. Now today's report, which is going to be released in just 1 minute, could be a market mover to move us off all this neutral posture. We'll see what that does, both in the short price action immediately after the report, but also as all the cash participants come together in an hour from now and have their own response. From a sector specific, yesterday you can see it was all about being defensive. Real estate, utilities, consumer staples, all the kind of dividend paying conservative kinds of stocks. Those were the ones that people were buying yesterday, whereas the high beta risk on stuff was largely being avoided. And I think that's probably it for today. We'll wait and see what this report does. In the meantime, let's get this to publishing. And we have disclaimers as always. Hit the pause button if you need time to review the disclaimers. Also note the hyperlink down here at the bottom for the full set of disclosures. We expect to be back here with our next market preview from Falcon Global for Monday. In the meantime, manage that risk profile, and each and every day go out there and learn something about your trading. Good trading.